seven different, seven different ways will combine, compare the two banking style. We'll look at the interest they charge, how they charge interest or income, how they make money, the kind of investments those organizations get involved with, the risk, how they share risk, what they do to mitigate risk. Banking is all about finance and risk, how the bank mitigate risk and all that. We'll also look at the deposit product, what kind of deposit product they have and how they go about, enticing the public with the deposit product that they have. Again, we'll also look at financing, how they finance customers, what kind of finance options you have with them, and all that. We also look at social responsibility. I told you before, banking is about trust and social responsibility. We look at how this bank go about, engaging in social responsibilities and the products that they have, what kind of product they have, how they go about enticing the public with the product. Under financing, again, we look at the leasing product, how they lease product, what are the products available for leasing with them and all that. So, having said that, let's delve into interest, how the bank go about charging interest and all that. First, for conventional banking, it's all about interest, loans, deposits, good relationships are about interest. The banks, base relationship on risk-based assessment. If it's too risky for them, they charge very high. If it's less risky, they charge very low. That's why some banking products, some banking loans and all that, you get to charge higher on some, and lower on some. Generally, the financing product that has lower risk for banks, I charge lower interest, like mortgage and all that you have pledged your property, any other loan type that property is pledged for is charged lower interest. Why the types that the properties are not pledged, there are no property attached to it, ordinarily the conventional bank charge higher interest. So really, for conventional banks, it's all about interest. Relationship is about profitability and interest. Why, for Islamic bank, profits is all about profit sharing. The Islamic bank sees itself as a trader or an investment that you come in. The money you have brought into the bank is used to trade or do some form of investment or the other. So the profit on such investment is splitted between you and the bank. The bank sees itself as an expert in this case when you bring in money as for deposit and for investment. Sees itself as expert in this case. So what the bank does is to use expertise to invest that funds, to trade with those funds and make money. And the money so made is shared between you and the bank. As we go along, we look at the other product that is tied to this. So first, what you must bear in mind is for Sharia banking, for Islamic banking or Sharia banking as it may be called, the bank sees itself as an expert in this field, as an expert when it comes to, your money. So the money you have taken to the bank is seen as, an investment, is seen as an investment to the bank expertise to trade with, to do all sort of business with. So that's why the bank sees itself as an expert. When you bring in your money, the bank uses your money to finance one or two business, to trade in equity also, to also, invest in some other products that are what is called Sharia compliant. So in this case, the bank sees itself as an expert where the money you are giving to them is used to trade and they share you part of the profit. That is the major difference. The conventional banking is purely interest. It has nothing to do with expertise or trading. The money you brought in, you have been told that on these funds, on this savings account, is what you earn every month, every year. You have been told on this loan, this is what we charge. But on the contrary, the Islamic banking sees itself as an expert. The money you have taken to them is seen as money that you have invested in the bank expertise to trade with. So the banks will trade with the money and share you part of the interest. When it comes to investments, for conventional banking, yes, I tend to hear is investment. For conventional banking, what the bank does is purely profitability. risk assessment. They invest in alcohol, gambling, and tobacco that are prohibited for Sharia compliant bank. For Sharia compliant, there are strict rules for investment type. They don't invest in tobacco, they invest in alcohol, they don't invest in gambling business, they don't invest in investment that is also against the interest element that is charged by a conventional bank. They don't invest your money in businesses that is purely interest. They invest your money in Sharia compliant, investment. And what are Sharia compliant investment? Investment that are not, that are not into gambling, they are not into tobacco, they are not into alcohol, they are not interest based. They can take your money to capital market and invest in stocks, in businesses, and all that, but they won't invest in business so outlined, for so outlined as discussed earlier, gambling, tobacco, and alcohol. Your money will not be invested in such businesses. It will only be invested in Sharia compliant businesses. When it comes to risk, for conventional banking, customers of conventional banking bear the risk 100%. The risk in conventional banking is pushed directly to customers. The bank does not bear the risk. The bank has aforementioned, they have told you beforehand that this is what you pay for the loans you have given you. This is interest you pay. This is what will give you on deposit that you have invested, that you have brought to us. So any risk that is in between is 100% on you as a customer. Meanwhile, for Islamic bank, risk are shared with the customers. Like I told you before, the risk in all businesses invested in all by Sharia bank, by Islamic bank, is shared with customer. Like I said, the bank sees itself as an expertise, as an expert. So it uses expertise to invest in businesses, that it knows that will yield higher interest. So when there's risk of such business, the bank shares it with you. You also share the risk. If there is risk, if there is profit, you also share the profit as agreed. You need to sit down with your Islamic bank and ask them what are the sharing ratio for investment and all that. Their books will always be open to you for you to share, to look at, to know what is going on, to know what business they are investing your money on, and to know what percentage of profits will be shared. So for Islamic banking, risk is shared with customer. For conventional banking, you are your own. All the risk is pushed to the customer. If money is lost, your money is lost. If there is gain, they have been told you this is a percentage we'll offer you, in terms of interest. In terms of deposit account, for conventional bank, deposit accounts have fixed interest. Like I told you earlier, you have been told, that this is what you get on this deposit. Meanwhile, for Islamic bank, it is based on the profit that is made. It can go up today, it can come down tomorrow, depends on the profit the bank has made with your money while trading in it. Like I have also told you, the deposit that you have taken to conventional bank can be used to invest in whatever business, cinemas, tobacco, banking, other banks, and all other products that that yield fixed interest, gambling, alcohol, tobacco, and all that. Meanwhile, for Sharia compliant, which is Islamic banking, it is strict. Your money cannot be taken away, cannot be taken and invested in all these industries that are not Sharia compliant. Your money can only be used to invest in industries that are Sharia compliant. Your money cannot be used to invest in businesses that have fixed income. Because we know ordinary businesses should not have fixed income, it should vary. If you make plenty profit today, you share with your customers. Make lower profits, you share it with lower profits, also share the lower profits with your customers. When it comes to financing, for conventional bank, all loans are charged fixed interest. It's purely based on speculative. All the loans that you get when they go to finance you, warehousing, lease financing, short-term loan, long-term loan, overdraft, credit card, mortgage and all that is fixed. You have been foretold that this is what you are charged. Meanwhile, for conventional banking, there's no cash lending. I mean, for Islamic banking, there's no cash lending. Islamic bank will not give you cash. That you should note. They won't give you cash. All loans are tied to economic activities. You can't walk into an Islamic bank today and say you need personal loan, for instance. There's nothing like personal loan. There must be what you want to do with the money. You want to buy assets, it will buy it for you. You want to invest in your business, we'll look at your suppliers, how much you pay them, we'll pay the suppliers for you after you have done the risk assessment in your business and told you how much profit you will share. We'll pay your supplier for you. In that case, you will also be using your expertise. I told you when you bring deposit to an Islamic bank, it's based on the bank expertise to use the money to trade, to do all sort of business and share you profit. When it comes to financing too, you are seen as an expert here. You walk into the bank assess your business and see you as an expert in the business you are doing. So the bank invests money in that business. That kind of investment is called morabaha. There are a lot of options. There's also morabaha. There's also the kind of investment where you share profit that is called modaraba. In modaraba, which is Islamic banking principle, you share profit like I've told you. The profit is shared between you and the bank. If you bring when you go to an Islamic bank to put in your deposit, it is seen as modaraba relationship. You have invested in the banking expertise. The bank uses your money to trade, like I told you, to finance, to go to the stock market, buy stocks that are Sharia compliant, use it to trade, like the money they also offer, people that are working for loan. It's seen that the bank is an expert here. So the money that is made is shared between you and the bank. Ditto for when you talk of loans. You have walked into the bank sees you as an expert after they have assessed you, as an expert, sorry, after they have assessed you. They fund your business, and whatever profit you have made, you share, the bank takes its own share, you also take your own share as agreed. So those are, what the bank does. And under this finance principle, you have the Zaraba, you also have the Morabaha, you also have the Ijara. Ijara is lease financing. We'll look at lease financing a few minutes from now. This finance has its own, long, thinking and all that. So we look at this financing also, which is Ijara. We'll look at the difference between Ijara, which is lease financing in Islamic bank, and ordinary lease financing in conventional bank. When it comes to social responsibility, as far as the conventional bank is concerned, it's purely focused on profit maximization, Even if they go to do socials in public and all that, it is based on what the bank can get, projecting itself, how can what area can we deploy social responsibility so that the bank's image can be a lot higher, so that, what comes to us can be a lot more. For conventional bank, it's purely profit maximization. No story. You walk into the bank, the bank wants to see you as something that we can make profit on. If your relationship with the bank is not something that's profiting the bank is not interested. Meanwhile, for Islamic bank, what the bank does is, like I said, invest in ethical relationship, ethical businesses. The bank does not look alone at social responsibilities. It looks again at what are the socially responsible things that we can do as a bank. So that is it about social responsibility. When it comes to products, like I've told you before, there are a wide range of products with a conventional bank. There's credit card. They also invest in derivatives, fixed deposit, treasury bills, and a lot more. It's purely based on speculation. It's purely based on fixed interest. For Islamic bank, there's no speculation. There must be expertise. The interest is not fixed. What you earn as income is not fixed. That's why it's non-interest bank. There's no interest per se. What you earn as income is not fixed. The bank, you look at what you bring on the table as an expert, and also invest in it. and sit down, watch it together, do it together, and profits is shared. That is not so for investment in for conventional bank. Limited for Sharia compliance, this non-interest bank products, they invest in products. The investment in products is limited. They are not free to invest in anyhow products that will bring profit. They have strict rules that they follow in investing in products. Sukuk, there was a time one federal government sukuk was floated. Most of the investors, although conventional bank are also free to invest in sukuk, but most of the investments, investors in sukuk are people that are Sharia conscious, conscious of non-interest. What you do with the money that the Sharia compliance as a what you do with the money that Islamic bank are invested in is purely Sharia compliance. They won't give you money, to invest in, anyhow. They will monitor it together and ensure that it's done, in line with Islamic principles. And what are the Islamic principles? No gambling, no speculations, no, tobacco, no, also alcohol. So even if the federal government of Nigeria has floated sukuk, in the sukuk prospectus, it must have been stated that this and this and this and this are what we will invest this money on, and the money will be invested purely in that, and no other investment option will come in between. So we have looked at the products, we have looked at social responsibilities, look at financing. Let's look at leasing as an aspect of financing that Islamic non-interest bank, and compare the two. When it comes to conventional bank, it's purely, for business, like we told you earlier. What they do with the money is purely for business. Your leasing arrangement is purely an arrangement where the bank itself, see itself as an investor in your business, in the product. The leasing, between the leasing arrangement between the conventional bank and non-interest bank is slightly similar, but I'll point out to you in a few minutes what the difference are. For conventional bank, once you arrange a leasing with them, the payment commence immediately they have paid for the product. What do I mean? For instance, you have arranged a leasing arrangement with the bank to finance a car, for instance. As soon as the bank has parted money for the car, as soon as they have paid the car company, the seller, to give you the car, that will you will go and pick the car from, the payment starts 1 month after. Unlike, non-interest bank. Non-interest bank payments will not start until after you have, after the car, for instance, have been delivered to you. That's why I said they monitor the business, you are in it together. The payment will start after the product has been delivered to you. Ditto for all other financing for Morabaha too. Morabaha, is a form of financing, like I told you, that is purely financing of products and services for traders and all that. We'll look at that also in a short while, just to keep that in. For conventional bank, late payment is charged even on leasing. If you don't pay as agreed as at agreed time, you automatically be charged late payment. Meanwhile, for Islamic non-interest bank, late payment is discouraged to a large extent because the bank sees that you are being honest. That's why I said earlier that the relationship between you and your bank should be that of trust. The bank must have seen you as being honest. Late payment is not your fault, and all that is discouraged. It may be charged. If it's charged, it's not going to be earned by the bank. It's going to be paid. It's going to be used for charity purpose. It's going to be transferred to charity organization or used for charity purpose. That is what Islamic principle is all about. For Islamic banking, that is strictly what they do. Late payments, if it's charged, it's discouraged. Though if it's charged, it's paid to charity. For leasing again, for conventional bank, the bank for one reason or the other can decide to terminate the leasing agreement between you and the bank. The bank, for one reason, they've seen one thing that's not pleasant, they terminate and they pick up the asset from you and sell. For Islamic bank, leasing agreement between you and them, if it's going to be terminated, it's going to be something that's agreed. They sit you down. This is what you have seen. This is what you're doing. This is what we have seen you doing. This is what is not pleasant. This is not what you have done outside this agreement. You don't want to pay again? Let's terminate. Don't forget the product for both leasing for not conventional bank and leasing for non-interest bank, which is called ijara. The product is owned by the bank until after you have finished paying and the bank discharge you of responsibility. So if there is any reason to terminate the contract between you, excuse me, between you, frog in my throat. If there's any reason to terminate the contract between you and the bank, for Islamic bank sees you as a partner. They sit down with the bank and agree on termination. Again, for non-interest bank, the customer is liable for misuse of the assets only. Every other cost, as I said, is purely borne by the bank. When the bank sees itself as the owner of the asset. Unlike conventional bank where you pay insurance on your car, you pay all other costs associated with the car, delivering to you, delivery costs and all that, it's purely borne by you. For a non-interest bank, the bank bears all that. Insurance, except otherwise agreed. Insurance, cost of delivery. The only thing that the customer bear is when the asset is misused for one reason or the other. And that will be spelled out in the contract. What can lead to misuse? What are the things that you do that will amount to misuse of these assets? So that is what the customer bears when it comes to ijara, which is leasing agreement with a non-interest bank. Yes, let's look at Mudaraba again, also part of financing. We've touched it earlier, where it is seen that the bank itself as an expertise when you take your savings to the bank, or you go to the bank to borrow money to finance your business. Yes, Islamic bank also finance business, but the bank sees you as an expert in this case, that the bank is investing. It's the depositor's fund. Don't forget, all the money the bank has is the depositor's fund, and they also kept in trust for for the customer. So whatever the bank is investing on, it believes you're an expert in that field and is giving you that money as an expert. So the bank monitors it. You are a distributor of Coca-Cola, for instance. I'm not. Coca-Cola is not paying me for advert. So let's just use them as an example in this case. You are their distributor. The bank will not pay the cash into your account. The bank pays directly to the company you are buying the products from and monitor delivery. You are the expert here. You know how it's done. The bank looks into it and monitor it. Once it's delivered to you, once you start selling and paying back into the bank look at the movement and also take its own share of the profit that's agreed and leave the other profit to you. Conventional bank also practices that warehousing agreements and all that. But for a non-interest bank, it is purely based on that. Non-interest bank will not pay you money, will not give you cash as finance, will rather pay for the product and recoup their money gradually from you as agreed. So another thing about financing for non-interest bank is apart from we've looked at Mudaraba, we look at Muharaba, we look at Ijara. Those are the three options. We told you that the options available for you as customers of non-interest bank are limited. Their financing options are limited. Are limited to the three that were mentioned: Ijara, Mudaraba, also Muhabara. Those are the three options that are available for you. Like we have told you, all about non-interest bank is the fact that they share profit and loss equally with you, as agreed, not equally now, as agreed with you. Again, there's no cash disbursement to your account for any reason. Your deposit to the bank is seen as an investment in one product or the other. And every month the bank shares you part of the profit. For current account, the bank sees itself as a custodian of your fund. It's on demand. Once you ask for it, you get it, just like savings account. But interest on current account is split down. The bank, most Islamic bank don't give you interest on current account, and they also just don't charge you AMC on your current account. No, it's not allowed in Islam. Not allowed in non-interest banking. They don't charge you fees on a current account like it's done in conventional bank. All charges that I see in your account in non-interest bank are government-related charges. What are government-related charges? If you see cash handling there, if you see withholding tax, are all paid to government, not by the bank. The bank are not allowed by the convention regarding Islamic banking to charge Islamic banking or no-interest bank. Let's play down the use of Islamic banking because it's really not, yes, it's a banking system that originates from Islamic principle, but it's non-interest bank. It's practiced all over the world. You have a lot of non-interest bank in the Western world, in environment that are not even Islamic, and Islamic related. And I must tell you that most of the customers, a good percentage of the customers of non-interest bank in Nigeria are non-Muslims. In fact, the originator, the person that moved for non-interest bank to be created in Nigeria at the CBN is a non-Muslim. He's one of the experts. I'll spare his name. He's one of the experts in non-interest banking is at CBN. He's a non-Muslim that moved that it should be created, in Nigeria. So that is all about non-interest bank. We may have missed out one or two things. Please feel free to pass your comment, share your comment with us. Let's hear you in the comment section. Let's see your reaction. Let's see your reaction to this broadcast. Thank you. Hope we've been able to increase your banking wisdom with this live broadcast. Until we come next time, God bless Nigeria. Thank you.